We're going to talk about how we actually use seasonality charts in our trading. So first, what is this seasonality chart? It's basically you take the period of time for that season and you average the returns over whatever yearly period you want. So basically over this time period, January has been an amazing month for gold, right? So let's see how what do we actually do? Do we just buy when it's going up and sell? No, we don't. We look for the most strong periods that we can find in the chart. So for example, we're going to be focusing here on January, February, and maybe the last week of December, and maybe looking a little bit more into gold and seeing if we find some other reason why we think that should be true. And a lot of times you might not, but you could still take the trade anyway, even though there's no real reason that you can find why it might be going up. It just, maybe you just can't. Maybe it's just hard. It's hard to know, but there's some reason there. But you may not actually want to take the trade just from the seasonality chart alone. You would want to be looking at a trade that you already sort of want to take, and then looking at the seasonality chart to either confirm it or maybe filter it out. But in special cases, maybe when the seasonality is extremely strong, you might want to take the trade just from the seasonality chart by itself. But most of the time, so for example, if you were really bullish on gold and you were looking to go all in on gold, and maybe it's beginning of May, and you see, that the seasonality for gold during this period is pretty weak, is pretty below average, you might want to reduce your position size a bit or maybe not make the trade at all. And similarly, if you are on the fence about making a trade, you're thinking of buying gold, you're not so sure, and it turns out that it's right here, you might want to continue and make that trade.